Hi everyone, I'm Chad Shoop, and every earnings season I flash back to my junior year in college. During that year, it was in finance class, and we had a stock market challenge game going on over the semester, and we broke up into teams, and we were basically just picking the best stocks that we thought would rise in value over that time period. Now, keep in mind that this is before I had my chartered market technician certification, so at this point I wasn't really studying short-term trends. Instead, we were using pro forma analysis and running valuation models on these companies, trying to make a basket in our portfolio of great stocks. And it's a very practical approach to take, but in the short term, it's not really going to generate the best returns. Instead, and keep in mind this is a simulation, so it's all fake capital, there's no real money invested. So one company just completely ignored the idea of making a portfolio of stocks and instead went all in, pushed all their money in their account into one position ahead of earnings, and they knocked it out of the park. The stock was Google, and it shot up about 10% on earnings and continued to climb from there. And when everybody came to class the next day and we reviewed the results from what we've seen our portfolios do since the previous day, everybody noticed that this team was way ahead on top. And instead of us sticking to our strategies, to what we were doing, everybody kind of broke their pattern and decided to follow this team, what they were trying to do, push all their chips and just take a gamble on stocks during earnings season. And I know this mentality of kind of seeing what's working for others and then trying to replicate the same thing on your own by taking more risk than you're comfortable with just because you're trying to get to those returns. It's an absolute nightmare for you. No other team caught up to that team because they were so far ahead, and then when you're gambling on earnings, the odds are that you're going to hit a few landmines along the way that are going to absolutely crush your portfolio. And that's exactly what I saw happen to all the teams that we were trying to race to catch up to this other team. So I use that as a mental picture every earnings season as what not to do, that I don't want to get caught up in the hype around gambling on earnings. And instead, by using that model, I've developed a proven strategy that is way more consistent, way more profitable, and still ties into earnings. But instead of gambling on the earnings announcement, I have a completely different approach. So if you want to learn more about that approach and why it's the best approach to use right now, be sure to read the full article below this video. And that's all for my video today. So until next time, I'm Chad Shoop.